David, how are you doing today?
Well, I've been better actually, but I'm doing okay. Thanks, Elijah.
Yeah, definitely. Well, I mean, it's not a pretty day for the metals today as we record this November 13th on Tuesday. So essentially we're seeing nearly 3-year lows. We're getting close to the lowest point that silver has been since really December 2015. So what is happening right now? What is causing silver and gold actually to fall so significantly?
Well, I mean, the tried answer, which is actually the most accurate answer, is there's more more selling pressure than buying pressure. I think there's, fundamentally why. Well, I think number one is that the metals, particularly silver, have been in such a poor decline for so long. I think a lot of ardent bulls have given up and moved on. And then you had, a competing market, I'll call the precious metals an alternative currency, really their money. And then you had the alt market with, Bitcoin coming on the scene, and then all the tag-alongs, and there were some very interesting things on the blockchain. I'm not opposed to blockchain, by the way. So I think a lot of that competition took a lot of zest out of the metals. A lot of, particularly the silver side, moved out of silver, cashed out at a $5 loss, $10 loss, $1 loss, a slight profit, a big profit, wherever they were in the silver market, and moved into the crypto space. And a lot of those people rode a pretty nice move in the cryptocurrencies last year. And now they're getting stagnant because after the peak in Bitcoin, it's basically been downhill with some pretty significant bounces, but overall the trend is still down and still basis on a technical perspective is still on a sell. So both the metals and the cryptocurrencies of recent have just lost market interest. There's a lot of people that are holding. I guess there's this HODL expression, holding on for dear life, but there's not much new interest in either of those markets right now. As far as the stock market, it too has kind of been overextended for a very, very long time. So the smart money has already moved out. A lot of kind of the smarter money is moving out as well. So all these sectors are just kind of staying in a place that's showing low volatility right now. But I think we're getting ready to see a rotation, which means if stocks fall further, we had that 600-point Dow down day here recently. A little bit more of that. I mean, I think we'll start to see the metals pick up, especially gold, because gold is the best contraindicator and best performer vis-a-vis the overall stock market. So I do think you'll see a rotation. How soon it's going to begin is anybody's guess. The metals, especially silver, do not look good at this juncture.
So yeah, regarding, I guess, precious metals, you're saying this does not change the long-term trend then?
Well, it could. Depends how you draw a trend line. I don't want to be too technical because I think the fundamentals are more important. But, I've certainly done excellent at calling every top in the silver and gold markets all the way up. But people forget, the gold market was an 11-year bull market. I mean, every year over year for 11 straight years, gold was higher the year after, it was higher the year preceding. In other words, 2001 was higher in 2000, 2002 was higher in 2001, 2003 was higher in 2002, and on it went for 11 years. Silver in that mix was one of the best investments you could hold for a few years in a row. But that's well behind us. It's been several years since you've caught much attention. And I was premature in 2016, calling that low in 2015 you just mentioned, which was 1365 basis the spot market as the low for both gold and silver. And it has been and remains so. But it could be challenged here. I mean, silver is only, 35, 40 cents away from that point. And it could hit it. It could double bottom. It could go below it. I don't know. I still, not for stubbornness, I still think that low may hold. But, it's been tough. I mean, I don't try to make any excuses. We've done well because we're just not silver focused. I mean, we've done things in zinc and, doubled our money on a zinc stock. And we have some special situations that have done fairly well for us. We're on Kirkland Gold, which did very well. West Haven, take a look at that stock. But overall, the sector has been pretty tough to do well in. And I think I answered your question. If I could just divert you a little bit, just to kind of give a scoreboard, because we're almost at the end of the year, I've got some real quick numbers for everybody to look at or think about. So this goes through basically most of the metals. I'll just read them off very quickly, but aluminum's off 12% for the year. Cobalt, which was kind of the darling there for a while, is off 32% for the year. Copper, we're, in a copper shortage, copper. It's off 15% for the year. Lead is off 21% for the year. Moly, which was one of our favorites quite some time ago, is up 62% for the year. Nickel's off 6% for the year. Tin is only off 3%, and zinc is off 22% for the year. Gold is only down 7% for the year, which compared to those base metals I just read is not that bad. Palladium is up 5% for the year. Platinum is down 8% for the year, and silver's off 16% for the year. Moving to the indexes, the HUI is off 25%, and the XAU is off basically 25% as well. So with gold off 7%, a factor of 3 would be about 21% for the leverage up and down. For the HUI, the XAU, it's actually off almost 4 times. So again, it's certainly not been the best year for precious metals bugs. That's for sure.
Definitely. And you were talking about the low for silver that was hit about 3 years ago of 1365. If we are going to break down below that, what happens then?
Well, I think you get more technical selling, and you probably get some of the weak hands that are left. There aren't many weak hands here. I mean, it's mostly in strong hands. So you might see a few trades. I mean, most of these bottoms and tops are not like significant as far as the amount of trading done at those extremes. I mean, this is something that I didn't know as a beginning investor, as a teenager, because I started at 16 years of age investing in the markets. But, I thought, oh, geez, that stock went to $2, and I could have bought all that stock at $2. No, I mean, the amount of money I had in those days probably, but the point is, you cannot buy even one of these penny stocks in a massive size at that price, because any good buying pressure at all starts to force the price back up higher. Same thing at the top. If you start to sell a bunch of stock, even in Apple, which is a very liquid, very diverse, spread out stock, there's still a limit on all these things. And so when you start to sell a massive amount relative to what the amount of the, is willing to be sold or bought, it's going to move the price. So the point being is that we could see a new low and not last very long. We could see a new low and it could drag on. I mean, I've been actually a little more bearish this year, I think, than I usually sound. We had that up day for gold. I think it was up $30. I think that was off like 800 points on the same day. And a lot of people, this is it, it's on its way. And I said, no, I don't think it is. I want to see all the trading to the end of November, which are halfway through. And that $30 up day has been erased in the gold market. And silver looks like it could test the low and maybe go below it. Well, what would happen is that probably, as I just said, I'm repeating, but probably see a lower low then. I mean, and you'd probably get some people to cough up physical silver, some people that would leave the market never to return. But I don't think it'd be as impactful as it might look on a chart. I think it would be more of a talking point than a really significant move in the market. That being said, if it went from 1365 down to 10, that'd be a different story. I don't see that.
And I mean, how low? You're saying it wouldn't go down to 10. I mean, what would be the next low beyond that?
Well, I don't know. I'd have a chart in front of me. And, I do pay attention to the technicals, and a lot of my friends are CMTs, certified market technicians. I don't get all wrapped around it. I use a lot of lessons of being beat up on how to trade and trade efficiently. and keep yourself from being hurt. I have one of my people that had been with me about 10 years, and he knew a lot more than me about picking a bottom in the silver market. And I did an update for everybody as I do, and I showed them that there was a reverse head and shoulders in the gold market. I didn't see it in the silver market. He did. That's fine. I mean, I'm not here to tell anybody anything other than, what I do best. And I thought, geez, and boy, that market, the silver market's gone down significantly since he told me I was wrong and the market was going up. And he may be wiped out. I don't know. When you get leverage, you get a margin call. I know. I've been there. Anyway, I'm off. What would it look like? I don't know. I just don't know. I mean, I could give you a number if I looked at a chart. I really don't care to do that right now. I think it's more important to go back to what I said earlier. We're at a point fundamentally where we need to rotate. I mean, the stock market's getting old in the tooth. The bond market isn't looking appreciably good, meaning that we've already broken a trend line there rather significantly. So both stocks and bonds are overdone. So now where's that money going to go to as it moves out of those markets? And the answer is probably in the gold market. Some will spill over in the cryptos, and the crypto guys will probably say the opposite. It's going in the cryptos, and some will spill over into gold. I don't care. Have it your way. Either way, I think you're going to see more. I think you're going to see more go into gold than you would into the cryptos, but I could be wrong.
And as for the stock market, what is your perspective on how stocks have also, I mean, we're seeing a downturn also today in the stock market over the last couple of days. Why is there this downturn coming? Some people did think, like, getting back, like, last week regarding the election, some people thought if the Democrats took the House, there would be this gridlock and this, a lot of Trump's, agenda would not be able to be pushed through. And a lot of people were thinking that stocks would take a hit. Now it seems like they actually rallied on the election, but now they're going back down. What is happening with regards to stocks right now?
Yeah, it's always hard to answer a why question. Mm-hmm. It's like as if because there's, for every seller really has some are technicians. Some are based on, but there's always, someone needed to pay off a bill. Somebody had to, pay a quarterly tax payment. Someone had to, so there's all these variety of reasons. But on the aggregate, I'd say that we're seeing an indecision pattern to lower in the stock market, which means that a lot of people are starting to question how much further can this market go. I mean, if you check the new highs versus new lows list, there's hardly any new highs. Every technical indicator, anyone with any sense whatsoever at all that studied the stock market or markets in general, such as yours truly, knows that the stock market really doesn't have a lot longer to go. Doesn't mean that it can't make a new high. It could, but it would be a new high based on algorithmic trading and juicing the market. It wouldn't be on fundamentals because of what I just mentioned. Advanced decline lines, what these, reporting agencies are showing for true profitability of these companies. Everything's priced in sort of to be perfect. It's not. So there's fundamental and technical reasons why the stock market is still very overvalued. So the tendency would be more to the downside than the upside. And of course, that's what we've seen over the last few weeks of trading. Unless we get some, intervention from the working group on financial markets or, some default somewhere in the banking system, as an example, you might see a run to the dollar or run in the stocks for a while. But I don't see it. I think we're seeing the best in the stock market for a while. Time will tell.
Mm-hmm. Definitely. I know last time we were having you on, you said that if we had just seen a stock market correction, this was back in October, you were saying if stocks fell an extra 5% by the end of November, that this would be a sign for you that we're in a downtrend.
It would be. And
are you still holding to that then?
I am. Yeah. The numbers are the numbers. I can't control them. I just have to obey them. I had an interview earlier this morning, and, so many people are so frustrated with whatever market they're in. And, most people like to be leaders or think that they're leaders. And leaders are, when I'm going one direction and there's no one behind me, it's a pretty lonely trail. it's a pretty tough path. I mean, you got to have a sharp machete and a lot of fortitude to march on by yourself. And then you get that one follower, and then there's one behind him, and then all of a sudden, you've got a few people behind you. But that's the frontiersman, that's the one out there that's just, or the pioneer that's blazing the trail by themselves. So the analogy or the metaphor is about, when that train is moving and it starts to move rather significantly, you're at the station house, you got to run and get on board. And that means you let the trend be established. And once the trend's established, it's a lot easier to get on board and ride it. But most people aren't willing to do that because they didn't get the bottom or they didn't get the top. Well, you know what? A real experienced or seasoned investor, especially the professionals, they wait for the move and then they get on board. You don't need to go from station to station to make the most money in the market. You need to get on board when it's going from A to B and it's moving the direction you want it to move, and ride it for most of the trip, get on and off before the maddening crowd wants in or the maddening crowd wants out. That's how you play it. That's how you do it. And as far as the metals go, I mean, Elijah, you know me as well as probably anybody. I think you were 16 years old when you met me, and that's many years ago. But, I've never said put everything in the metals. I've always said it's a hedge position. I've always said, 10% is probably best for everybody. Never told anyone to put in more than 20%. So what are you doing with the other, 80% of your money? Are you in real estate? Are you in cryptos? Are you in bonds? Are you starting a business? Are you, whatever? So, I get a lot of flack like everybody, and I don't really mind it. But what I'm trying to point out for people is that, look, I specialize in a sector of the marketplace that can bring you more money than the rest of the market. I mean, I can make more money in the metals when they're moving than I can in the general stock market. But they're not moving right now. So, now's the time to build cash and get on board after you've built up a nice, cash supply and wait for that trade to leave the station.
All right. Well, David Morgan, thank you so much for your time today. Before we let you go, did you want to share with the viewers any last thoughts you had and where they can find you online?
Yeah, I do. I mean, I want to wish everyone a very happy holidays, Thanksgiving, of course, and whatever your desire is on the great Christmas, and every other, let's be, aware of all the other religious traditions out there, and I am. I also would like to say, if this is my last interview, I want to thank you, Elijah, for, just doing what you do, providing good information for people for free, and trying to, being objective, I think, and, being, I don't know, I just like your style. I think it's a good one. Just go to themorganreport.com. I mean, I do about 2 or 3 interviews a week. If you go to themorganreport.com and get on the free Morgan Report, you will be emailed every weekend what I've done during a week. Yeah, we do make offers on that list. If you don't like the offer, just bypass it. You don't have to write us and tell us you don't like it. A lot of newsletter writers rent my list because I have a list of people that really are interested in the markets and making money in them. And they know that, so they rent them from me. And occasionally there's offers from coin dealers and stuff like that people on that list really appreciate it, because sometimes there's some real good deals in there, not like super beyond belief deals. Actually, there has been a couple of those. Sorry for my laugh. I just remembered one we did recently. But, there's that. Just, you don't have to subscribe. You want to be a premium member, that's fine. I'd love you to be a premium member, but that's not for everybody. It's for people that really do want that 10% hedge against the general market itself, and basically for economic uncertainty, which I think we're going to see more of here as time marches forward.
All right. Well, yeah, Merry Christmas to you, David, and thank you so much for your time.